Hey guys, I'm Jared Wesley of Live Traders, and it is that time of the week. It's lecture time, and this week's topic, guys, is how to use bottoming tails to help pick the turn. Right? It's a very important topic because if you don't understand where you are on the chart, it's kind of hard to pick the turn on the chart. If you don't understand where you are, it's hard to predict the future, right? So understanding the market's basic atom stage 1, 2, 3, 4 is important, but these bottoming tails will help confirm what you're seeing on the higher time frames. So today we're going to look at the higher time frames, we're going to look at the lower time frames, we're going to put them together, and you're going to see just how powerful and important bottoming tails can really be. And if you let the chart speak to you and you don't speak to it, you let it speak to you, it's a very profitable concept and a powerful one at that. If you like these videos, please click that like button, hammer that subscribe button. I'm Jared Wesley. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is using bottoming tails to, quote, pick the turn. You know, we just finished up mentorship, and bottoming tails and double bottoms and retests are a topic that we spent some time on. And people need to understand that if you don't know where you are in the market's basic atom, right? We have the stage 1, stage 2, stage 3, stage 4, right? The market cycle, the atom. If you're not sure where you are in that, it's hard to make money. Because if you don't know where you are, then it's hard to predict the next move. Makes sense, right? And also, people forget that we have micro and macro stages, right? You could have a stage 2 uptrend, but is a micro downtrend. Now, I want you to visualize that. You could have a 3-month daily stage 2 uptrend, but during that 3 months, you're not going to have 60 green bars. Right, 20, 20, 20, you're going to have some pullbacks during that daily uptrend. So you may find during those pullbacks, 2, 3, 4-day pullbacks, that there's opportunity to short something on a 2-minute or a 5-minute, etc. So bottoming tails, when we talk about picking the turn, can help you confirm whether or not the turn is real. And that's what we're always looking for as traders, right? We're always looking for extra confirmation to make our trades more reliable. And without confirmation, they're less reliable. And the more confirmation we can get, hence the more reliable that they are. Okay? This one, I'm just going to go through it as it was. Apparently there was a when will the insanity? Oh, I remember this one now. Now it's coming back to me. This was a positive when will the insanity stop? You know, I threw a little curveball back then, and the positive when will the insanity stop was this. Forward message to me from Unmol, and notice the yearly profit and loss is over 22,000. That's huge for my family. So this was talking about the swing trading newsletter from a couple years back. Looks like 2021 yearly P&L, so you can kind of get a timeline for that. So again, it's a little bit older, but nonetheless, someone sending Unmol an email, and very pleased with the gains. For those of you that were at mentorship, we talked a little bit about Andrew Brown, and there he pops up again. Started with 12K, up 15K after mentorship. That's just coincidence, honestly, that's in there. Splitting 3 accounts at 3K. Why did I put this in there back then? I put this in there back then because this is somebody who ultimately went on to, and you'll see it here in the next couple slides, ultimately went on to make $150,000, $200,000 a year from someone who started with splitting accounts. And we all know why you split accounts. You split accounts because you don't have the $25,000 to get above the PDT rule, right? So starting with 12 grand, split 3 accounts at 3K, okay? My point, though, is it's possible to do so. It takes a little longer if you don't have the 25K, but this is a prime example of someone who started with a, I don't want to call it a broken account, but a non-PDT account, okay? And then You guys have seen this. I think I put it in PTS. Look forward to 2021. I expect 80 to 100 grand this year. We can keep going. I'm not going to spend as much time on it. And then boom, I have moved up to $300 risk. My goal is 12K a month. I've been averaging 6 to 8. So my point is, through the years, the 3 or 4 year stretch, he went from splitting accounts because he couldn't take enough trades in one account to having a PDT account to going from 30 grand a year to 60, 70 grand a year to 150 grand a year. So you can see a genuine natural progression. He lives in Alabama and has like a steel working company. They do a lot of different types of steel working. So you can see the progression there. And I said to you guys at mentorship, this was somebody who, when he joined our mentorship, his wife had passed away 2 or 3 months before. And he said, this is something that I need to do to focus on other things. Otherwise, it's a little bit depressing sitting at home and just coming to work and going home and there's no one there waiting for me anymore. So from something very negative that happened to him, he turned it into a big positive. And we had the discussion at that time about, are you sure you're okay to do this? Because I don't want that to be an excuse, because it's a legitimate one. And he said, no, I don't think that it's going to be an excuse. I think it's actually a motivator. And he proved me right. Yesterday in mentorship, we talked about, don't tell me, show me. Well, he did. He said, it's because I was concerned, hey, you could be an emotional roller coaster after something like that happening. He said, I could, but it's not my personality. I said, okay, well, show me. And he did, right? He did. So anyway, that was a positive when will the insanity stop segment. But let's move into these bottoming tails, okay? We always let the chart guide us. It was a big topic over the last 4 days. You don't speak to it. It speaks to you, and you listen, okay? I know it sounds so simple, but if we're being honest, we all put our own spin on it. A prime example of that is T2 today. I spoke to it, even though it was clearly yelling at me, telling me, Jared, the double bottom is the low. And if it breaks that, you do not want to be in it. And I said, yeah, I get it. I was a teenager. So I was shaking my head, or saying yes while I'm shaking my head no. So my point is we all do it from time to time. The question is, how often do you do it? Are you doing it on every trade? Are you doing it occasionally? Because if you make a habit of telling the chart or speaking at the chart, you're going to be in trouble. The chart speaks to you and you listen. That is it. And the chart isn't suggesting something to you. It's telling you something. There's a difference. Okay, it's not a suggestion. When I saw a double bottom with a huge bottoming tail, that if that bottoming tail was later broken, the stock was in trouble. Sure enough, that turned out to be true. So let it speak to you and you just listen. Okay, so start with the higher time frame and then drill down to lower time frames. But within the higher time frame, there's a lot going on. We talked, again, I keep bringing up mentorship just because it's on my mind, but within a bar, there's a lot happening. Within a daily bar, there are a lot of 5-minute bars. Right? There are a lot of 15-minute bars. And inside the daily bottoming tail, there's a lot of price action happening, which is why you're going to start with the higher time frame, but you're going to look at all time frames. You can't just trade in a vacuum, right? So the tail is going to guide you, okay? And your expectation matters too. Remember on T2, for example, Riven, R-I-V-N, I said 50% retracement is what we were looking for. And it gave it, right? But the expectation mattered because of the type of trade it was. Occasionally, 100 plus percent retracement is the expectation, but occasionally it's less than that, okay? So topping tails and bottoming tails. Location and the size of the tail matters, okay? Normal or wide range bars in which prices had been higher than supply forced prices to close below the midpoint of the bar. Note it says midpoint. So to have a true, and when I say true, what I mean by true, because that's a bit subjective, is I mean effective. Okay? To have a genuinely confirming bottoming or topping tail, it should be 50%, at least 50% of the size of the bar. Okay, so when you take the bar, I'm talking about the total range of the bar, from the top of the bar to the bottom of the bar. Note the tail on this bar is pretty big. It's probably 70% of the size of the bar. Whereas, if I go down here to the second bar right there, that's a doji bar, but the bottoming and topping tail are quite small. So they're less meaningful. They're less meaningful because a smaller battle was fought there. When you go to this topping tail, a much bigger, larger battle was fought there. And we can tell, because of that battle, that the sellers won that battle. And the reason there is significance, because it says it down here in yellow, location and the size of the tail matters. You cannot just look at a tail, right? You have to look at the location. Where is it happening? How did it get there? Okay, so for example, we're looking at the location of how it got here. Green, 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 green. Well, that's 4 green bars, 2 of which were wide range green bars, and then a big topping tail. Well, why is that significant? It's a topping tail, so what? Is it significant because I say it is? No, it's significant because the buyers were in clear control of this move, right? Clearly. And this is the very first time that something changed. The buyers are no longer fully in control. So the suggestion here is that the buyers are tired. If they weren't tired, then the sellers wouldn't be able to effectively leave a topping tail. But remember, you cannot have this bar in a vacuum. You have to have it in the context of the chart. So in the context of this chart, the 5 bars that we see, I must feel that there's a likely pullback in the future, because we're using past price action to predict future price movement. That's what that topping tail is telling me. Okay? Over here, it's a similar sentiment. 3 bars up, 2 of them are very, very wide range, and I get a topping tail and a change of color bar. Sellers are beginning to creep in. And the same thing on bottoming tails. And I know for some of you that have a lot of experience, this is obvious stuff. But it's how you use it that matters, and we'll take a look at that here soon, okay? But 1, 2, 3, 4, 5 bars down, sellers are just, they're in total control here. No big thing. And then all of a sudden, big bottoming tail comes in. And for those that you spent some time with us over the last 4 days, what color was this bottoming tail at one point in time? Where my cursor is, right there. What color was that at one time? Talk to me. It was red, right? Rouge is red, right? It was red. So this bar opened right at the tip of my cursor. I mean, right at the tip of it. That's where it opened. And after it opened, it immediately went lower, right? It immediately went lower. So when you look at this, let's see here. This will work. You look at this, it basically did this. That's what that looked like. That's it. That's what that looked like without the green. Without the green, right? So hold on. Do it one more because I think it's important that we do it. Whoopsie. Sorry, guys. I made a mistake there. Okay. Hold on. All right. That's exactly what that looked like at one point in time. Okay? I want you to take a look at that. That, at one point in time, was how that chart looked. So you're looking at it going, well, sellers are in control, sellers are in control, sellers are in control, sellers are in control. Oh, they're still in control. But that's not how it finished, right? it finished like that. So for the buyers to be able to overcome those sellers, it means one of two or both. It simply means that the sellers are exhausted and there's none left, or there's still a lot of sellers, but there's just more buyers. The assumption here is that the sellers are exhausted because it's 5 bars down, 6 bars down. And therefore the buyers are able to overcome weaker sellers. Most of the people who wanted to get out got out, took their profits, did whatever, or just couldn't take the pain. And then the buyers stepped up. Okay? So this is how you have to look at it. And just be clear, to be a proper bottoming tail, you want at least 50% of the size of the bar. Okay? At least 50% of the size of the bar. More is better. All right? Not going to spend as much time on this. All right? This is a slide, as I said in mentorship, that I could spend an hour or two on. I truly, genuinely could. And I have in the past. I don't know how long it is in PTS, but I spent a long time on it. What I want to focus on are the tails here. Not as much about the actual solid bars, but more about the tails. We just talked about the fact that bottoming tails are bullish, but then some people say, well, gee, it's red. But you can't look at it like red. You look at it like that. Right? At one point in time, it looked like that. Right? So at one point in time, this was actually just green. Sorry, my bad. I just messed it up. You guys are killing me here. No one's stopping me from making mistakes. That's better. Okay, that's better. At one point in time, I'm not at the green part yet. At one point in time, it looked like this, right? At one point in time, it looked like that. And then, this happened. Then, it looked like that. Okay? So it was all red. It looked like this bar over here, right? It looked like that bar over here. And then, basically, started to look like the bar above it. So when you look at that, you have to say the buyers are in control. But, what about this? Now what? Now what? How are we feeling? How are we feeling? Sorry, they should all be green. Man, you guys are killing me. I'm killing myself, I guess. Should have taken a day off. All right, that's better. That's better. Sorry about that. Now how are we feeling? Now how are we feeling? We still feeling like the same as, oops, let's move that over there. Don't worry, we'll do the same thing on both sides. All right, that's good enough. I mean, we have the exact same bar, but two completely different scenarios, don't we? Same exact bar, but completely different thought process. Right? One of these, you're saying, wow, this is up 4 bars, then I got a bottoming tail. There's not a lot I can do with it. Now, if you're in it, you might be able to just raise your stop loss, right? On the left side. If you're in it, you might be able to just raise your stop loss. But there's nothing you're doing with this bottoming tail, right? But over here, right, on the right, red bar, red bar, red bar, massive bottoming tail. Now you're thinking, gee, the buyers are starting to step up, and there's a very good chance stock is going to head higher. Same bar, different location. Right? Same bar, different location. So you have to act differently. One of them is an action event, potentially, right? This one on the right-hand side is potentially an action event, like, hey, it's probably going to bounce. Okay? The one on the left is a non-action event, right? You might sit there and maybe raise your stop if you're long, but if you're not in it, you're not doing anything with it. Okay? So the point I'm simply getting, I'm not really going to spend too much time on this slide, but one of them looks really good and there's something you can actually gain from it, like a pivot bounce. The other one looks like a stock that's still extended, and while the bottoming tail confirms strength, it's still extended, right? Now, let me say this though. Let me say this. I'm getting not ahead of myself, but I probably should leave this stuff on here so that I don't have to keep redoing all this. Hold on one second. Give me one more second. I want to create the same scenario. Okay. Say it's like that. All right. Follow me here. I know I'm drawing lines everywhere. I'm drawing lines everywhere. Just bear with me. Okay? Now, couldn't let's just use this. Right? Couldn't this be a lower time frame? Yeah? What if this is a 15-minute bar? What if this bottoming tail is a 15-minute bar? Couldn't this on the right be 2-minute or 5-minute, or right? We didn't fill in all the bars, but you understand what I'm saying. Maybe this is a 3-minute chart and there's 5 bars there and it does that, right? Or maybe it just looks like that. Do you guys understand what I'm saying right now? That say this over here on the left is like a 15-minute chart, up, 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 and then you get bottoming tail. Well, if you were to drill down to a 2-minute, 3-minute, 5-minute, that bottoming tail probably looks something like that. I need yeses or nos if you understand that. Left-hand side, higher time frame. Right-hand side, lower time frame. Does that make sense to you guys? Okay, so now the question becomes, is there anything we could do with it? I don't know, right? Meaning, if you're a scalper, you would probably do something with this, right? But if you're 5 bars up on a 15-minute, meaning where I'm going with this is, what do you need to adjust? I'll give you a hint. The word is an E, and it ends with an N. What would you need to adjust if you were to take this over here? Remember, for this example, we're on a 15-minute chart. Exactly. Sophia has expectation. Expectation. You have to acknowledge this is 5 bars up. You cannot ignore that. And just because the 3-minute or 2-minute or 5-minute looks really, really good, you cannot ignore the fact that it's 5 bars up. So I'm not saying you're prohibited from taking this. I'm simply saying you better be very, very aware of your expectation, because you're probably not going to get 6 or 7 bars up on the 15. You could, of course you could, but the odds are against it. So if you do choose to take that bottoming tail, you might want to maybe get out by the time it gets to the top of that bar, right? So if you got in that little buy setup, perhaps right there, maybe the high right there, maybe that's your target. Maybe it's before that. So I'm not saying you can't. I'm just saying please be aware of the expectation. All right? Gosh, it's so much easier when I can just do it on the computer instead of having to draw with markers. I need one of those Google screens. Okay, so I'm going to move on from this slide. Again, we only touched upon 10, 20% of this slide, but it's an important concept to understand that where it's happening is just as important as what is happening. And then you also need to look inside the bar. Okay? Now, candlesticks in context, which is a continuation of the same concept we just talked about. When something happens over a longer period of time, it becomes more valid because there are more people creating that pattern, which means more or less commitment depending on higher or lower, right? And we're always looking for commitment because commitment for us is confirmation of what we're seeing, okay? Note, I didn't say what we're feeling, I said what we're seeing, okay? Because the market shows us, and then it's our job to listen, okay? So when you look on the left, this is pretty obvious, right? This is a stronger sentiment than this here. And the simple reason is, give me the word, it's already on the screen typed for you. Why is the left over here stronger than the right over here? It's on the screen for you. So I've already given you the answer. It's there somewhere if you can find it. That's it. Depth of penetration. Exactly, Loveless. Sophia, exactly. The depth of penetration is like 150% or whatever the percentage is, but it's well over 100%. The red bar's high was here, and we've exceeded that by a good margin, good amount. Over here, we're 40% maybe into that prior bar. So I can see the commitment from the buyers over here is more I just lost my train of thought. More committed, right? The commitment from the buyers over here is much greater than the commitment from the buyers over here. Okay? So the larger the reversal bar in relation, and that's key, in relation to the prior bar, the more potent it is. Okay? The level or depth of retracement into the prior candle increases potency. You're taking out more of the enemy, which means what? There are fewer of those enemies left to sell into you once you've taken more of them out, right? If you're fighting 50 people and you're able to wipe out 30 of them without losing any of your people, you've just turned the odds, right? 50 versus 50 is even. 50 versus 30, well, you have an advantage. 50 versus 20, you have a bigger advantage. 50 versus 10, you have a bigger advantage. Think of it like a stack in poker. The red bar is your competition, the green bar is you. Their stack is twice as big as yours. Over here, your stack is nearly twice as big as theirs. Okay? You have leverage on them. You're proving how much stronger you are to them. Okay? Over here on the right-hand side, these are obviously daily charts, they're gaps. But this gap down is very powerful because it's gapping like 80% into the buyers. So this stock went higher, right? Went up, 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 up. And then the next day you wake up and it opens here. But it doesn't just open here and go up. It opens here and goes down. So you're digging deeper into that enemy territory, and the sellers are proving to be much more powerful than the buyers. Over here, it's the opposite, right? It's not the opposite, but it's just less potent. Over here, you have buyers, then you have a gap up, right? Buyers here, we gap up. Then we sell off. While, yes, the sellers are in control, it's not quite as powerful as this because we haven't penetrated deeply enough or penetrated very much into enemy territory. So while they're both interesting, they're both good, I would like to see this one on the left more frequently. okay, because now I know it took those people out. So note, the size and number of candles matter. Happening over a wider, longer period of time is more potent. Happening over a wider, longer period of time and with wider range moves is also more potent, because you're taking out more of the enemy. If you have a bar that's $2 versus a bar that's 20 cents, you've taken out $2 worth of buyers versus only 20 cents worth of buyers. Okay, and theoretically, it's not 100% true, but theoretically, there are more buyers in a $2 range than in a 20-cent range. Now, does that play fair all the time? No. You could have more buyers in a 20-cent range than a $2 range, but more often than not, most of the time, that holds to be true. Okay, so location, level, and depth of penetration matters a lot. Okay. I stuck a random unmall P&L in there, so I'm just going to move past it because I don't remember why I did it. Okay, let's move on. So now we take a look at this. The higher time frame is very important. We talked earlier about your higher time frame bias. Okay, you're going to start with a daily or a 60 if you're an intraday trader, and if you're a swing trader, you're going to start with a monthly or a weekly. Okay, but the concept's the same. So if we look at Taiwan Semiconductor, TSM, this is a stock that gapped up over here. You see the pink line? It's taking out the pink line, but it's not just the pink line, it's even clearing the topping tail. Okay, and by the way, I wasn't planning on talking about it, but by the way, look at the topping tail. Green bar, green bar, green bar, green bar, that's 4 green bars, plus this green bar. So at one point in time, let's go back just because I can steal it and make it easier on myself. Whoops. Sorry guys, I'm just trying to make life a little easier on myself. Okay. Now let's change the color. Boom. That's basically what that topping tail looks like. That's basically what that topping tail is. Okay, it might be larger or smaller than that, but you understand that that red bar is sellers. That topping tail is full of sellers. Okay, so someone else might look at this and go 1, 2, 3, 4, 5 days up. Okay, and remember, it's important. We'll do this so we can get our analogy done. At one point in time, whoops. Hold on, I keep making mistakes. All right, at one point in time, this is a wide range green bar. I mean, literally, it just looked like that. Now, how are you thinking? How are you feeling about that? If you're an intraday trader and you're like 1, 2, 3, 4, and the 5th bar is massive, you're thinking there's probably going to be a pullback, but I don't speak to the chart. It speaks to me, so I'm going to wait until the chart gives me some form of confirmation, some vision that it's going to likely pull back. So what happens? That happens, right? Sellers start to creep in on a lower time frame, starts to pull back, get rid of it, and all of a sudden, you have a tail. What I'm trying to tell you is there are sellers in the tail, and there's potential opportunity in that tail if you are a lower time frame trader. Now again, I wasn't really planning on talking about that tail, but we did. Anyway, so now back to this. We have a wide range green bar gapping up over 4 red bars and a pivot and another pivot. And then it also eventually takes out the topping tail and this pivot and this pivot. So where this stock really struggled previously at 125 is no longer an issue. So this is a prime example of the ceiling becomes the floor, right? This 125 was a virtual ceiling. Buyers stepped up, moved up, moved up, moved up, gapped up, moved up, moved up, moved up. Pull all the way back, get a little bit of a red bar, then you get a little bit of a bottoming tail. note, there was actually a bottoming tail a couple days before this at level 1 minor price support. All right. So you look at that and you're like, that's possibly a buy opportunity. Where am I going with this? That little bottoming tail, see, 1, 2, 3, that green bar bottoming tail could have possibly been what? A lower time frame opportunity. 5-minute chart, 2-minute, 15-minute. That bottoming tail a couple days ago, maybe Aaron looks at that and goes, wow, look at that support line. Or maybe there's a trend line there. Whatever it is, you're looking at it going, maybe the intraday chart is providing me a double bottom retest on the 5, and it's happening at 125, which happens to be support. Maybe. I don't know. I didn't look at it. Okay? But anyway, pulls back, and then the next day, or 2 or 3 days later, you have a bottoming tail, and then you get a gap up. So, what are we doing here? We are matching time frames. We have the daily chart exactly where we want it. And I mean exactly where we want it. Okay? And then in my job, our job, your job, is to just find an entry on a lower time frame. Now, you don't have to go down to a 1 minute. That's aggressive for some folks. What do you have? Gap up that pulls back and then provides you with an opportunity. The opportunity is 126 or up in here. Now, it says late entry, but it's really not a terrible entry, because what does this likely look like on a slightly higher time frame? Oh my gosh, I've already given you the answer on the screen. So I want you to say it for me, because I've already given you the answer. If you can get your magnifying glasses on and read it. What does this on the 1 minute right here, the first 6, 7 bars of the day, what does that look like on a higher time frame? Talk to me. Oh, wait. You can give me a 2-letter answer. Yeah. It's a bottoming tail and or a turnaround bar, depending on the time frame, right? It's either a bottoming tail or an engulfing bar. Those are the answers. I was literally looking for BTTB, TBBT, okay? It's either a bottoming tail or it's a turnaround bar. Oh my gosh, what is this? What did you say, Jared? What is this? Sorry, forget. There. And what do we have here? I just blew up the 3-minute chart. And what do you have? Turnaround bar, right? So it's either a bottoming tail or turnaround bar. So now the thought process changes a little. You're like, wow, look at the daily. Look at the 3-minute. This looks really, really good. Okay, let's take that off so we can go back to what the chart looked like. Okay. So now you could maybe argue, right? Maybe argue to get in at 126. A little bit aggressive. I mean, you're 3 or 4 minutes into the day. Okay, on a stock that can be whippy. But long story short, Omal at 9:37 in the morning said, hey, TSM, high day, low day. High day, low day. That's 1, 2, 3, 4, 5, 6, 7 bars. Is right just past that arrow, just after that arrow. He's in. Pops. Small pullback. Rips. 129. Based off of the daily. Based off of a bottoming tail on the daily. Right? You look at it and you're like, that's good trading. That's high level trading. Some people, if you're not looking at a different time frame, like say the 3-minute, you might be like, well, what the heck? Why is he getting in right here after a wide range thing? Notice the dot, dot, dot? It's because you're not looking at the turnaround bar over here. And he gave it the room. He didn't get super aggressive with the stop. He said low of the day. So it was a little bit of a stop loss. I mean, it's probably $1.50. Maybe not quite $1.50, but close. Thankfully, the stock ended up moving from like 126.75 to 129. Yeah, $2.25 or something like that. Okay, about 2 to 1. Now, let's take a look at Lucid. You can't look at any chart in a vacuum. You have to look at the whole thing. So let's start with the left, start with the daily. Okay? We have a stock that in general was moving higher. It broke out over here in October, November, moved up, got choppy, pulled back. But if you see this pink line, we are below the moving average. Okay? There is a little pivot over here, right? A little pivot there. But the stock has been holding this area just above 35 pretty well, right? Pretty well. And then peekaboo's under and goes right back up. So in a way, kind of what T2 did on the long side today. So this stock went below support and immediately came right back up. That's a sign of buyers. Now, am I telling you to buy it right here? No. Right? Is this bottoming tail important and why? The answer is yes. And because it's reconfirming that this stock is generally strong. But remember, just being strong or weak is not a pattern, right? It's a partial reason to take a trade, right? It's not the only reason. You can't just take a trade based off strength or weakness. You cannot do it. Some of you do it, but you can't do it, okay? So that reconfirms the commitment from the buyers because under the pink line, the stock really should have gone lower, and it didn't. So I'm not telling you to buy it here. I'm simply saying if you saw this, you would mark Lucid. Say, in the next couple days, I want to watch Lucid because that bottoming tail is a failed breakdown. And the concept there is if the breakdown failed, then the buyers are stronger than the sellers, and maybe this goes back up. And it did. Wide bar, narrow bar, and then you get, I don't know if I would really call that a 3-bar play. Some people might. But anyway, right there at 43.20, you break above it. So take a look at that range like, hey, this is kind of where I need to be. Now, over here, the stock doesn't really gap up. It kind of opens flat, moves up, and pulls back to a small 3-minute area of support. You get a little buy setup, okay, at 42. Unmo is a little bit late to this party. Stop is there at 41.38. His is actually a little lower than that. Gave it a little bit of room. And it ripped higher, chopped, and then kind of set a little bit of a wedge. But my goodness, 42 to 45, that's a pretty big move. Okay? So he actually, you know what, come to think of it, if I look at the time he called this, and I'm on a 3-minute, 33, 36, 39, he really actually kind of bid for Lucid if you look at it, right? He kind of bid for it a little bit early on that red bar. Now that I'm looking at the timestamp, he actually bid for it on the red bar before the bottoming tail and doji bar actually gave him the confirmation. When you got the confirmation, you probably should have added at 42, quite honestly. So if he was bidding for the pullback just above support, probably should have added at 42. But the point here is the overall concept between the daily and the lower time frame. And it started with the daily bottoming tail. And then after the daily bottoming tail, it was up to your patience, your level of patience to wait for it to come to you. Okay? All right. Starts with the daily chart. You guys see a theme? All right, let's take a look here. So, we have a stock that's clearly in a downtrend. Declining 50 MA, declining 200, lower highs, lower lows. It's clearly in a downtrend. And it sits here and goes, wow. When it says, what is this? The answer is, it's a breakdown, right? Stock's in a downtrend. It's below the moving average. It's consolidating back towards the moving average, right? Back towards the moving average. And you're saying, oh, not bad. Let me ask you, in your mind, in your opinion, is this a shortable breakdown? Okay, right over here. Is this a shortable breakdown? Yes or no? Just give me a Y or an N. Is that a shortable breakdown? Is that an acceptable short as a breakdown? Cat got your tongue? Someone says need more information. Someone says yes, yes, no for me. No. Do you guys sometimes feel like seeing the outcome of the trade affects your answers? Because I do. I feel like that happens a lot to you guys. Right? I feel like if we were kind of to just insert something in there and just not see the future, I would look at this and just think, solid. Great? No, but solid. Right? You're back towards the moving average. You're still a little bit far from it, right? You're still a little bit far from it. But you're holding a certain area, maybe, I don't know, $62. It's somewhat narrow range. You break below that area. Volume spike upon the entry even, right? See that volume spike at the bottom? Okay, and you look at it and go, okay, I've seen better, but I've sure seen worse. And if this stock is downtrending, and if, we don't know, but if we look to the left and there's nothing down there, looks decent, right? Looks decent. Heck, it could be a monthly 3-bar play for all I know. I don't know, right? Yeah, I'd want to know that too, Derek. Hey, what's the market been doing? All those things. But I certainly would say it's possible, right? It's certainly within reason to consider it. It's definitely not a straight hard no, right? It's a solid maybe with a little more information. It's definitely not a hard no. Nonetheless, okay. Well, we all have, Derek, when we're drunk at the bar. I understand what you mean. But anyway, it breaks down. Big volume spike, and then immediately does what? It gets engulfed on bigger volume. So the wide range red bar, nice. Wide range green bar, not so nice. And that on a lower time frame is going to leave, or I should say a higher time frame is going to leave a bit of a bottoming tail. Okay, so now you're looking at the $69 or $70 area, right, as a possible move above or move back higher. Okay, so then let's go break this down, trying to figure out what in the world is Unmol thinking. Okay, Unmol says BYND 6680 by 6502. Okay, so he drills down to a 10-minute chart. You can see what happened to this stock. I mean, my goodness, kind of got hammered, right? And then bounces back up, all right? And then bottoming tail, rip, pullback, rip. So at 6680, he's getting 2 bars worth of confirmation at a prior pivot low. So a bottoming tail on the retest. It's important, guys, that this thing climbed so much off the low at 64. It's important. Climbed so much off the low. Puts in like a little bit equal. Then this big red bar comes in and was bought back up. And then the next day, you break above the declining moving average. If you were to draw a micro trend line, you'd be above the trend line. And these 2 bottoming tails early in the day are confirming that buyers are willing to step up in this area, 65.25 to 67. So the first bar, buyer stepped up. Second bar, buyer stepped up. So you're going to see what? If you drill down like a 1 minute, you might have a little double bottom retest next to a 10-minute pivot. I'm going to repeat what I just said. Okay? You might, and let me see if I can kind of snipping tool. All right, let's try this. Let's see if this works. Come on, snipping tool. How do I increase the... No, I don't want a new screenshot. Come on. Nope, that's not doing it. Sorry, guys. Zoom, there we go. That's it? Could do better than that. Anyway, that's not working out the way I want it to work out. I apologize. Let's just hit Control Plus, and I think I can get it up more than that. There we go. Okay. All right. You guys have that now. All right. Sorry about that. See those bottoming tails? Right there. That's a 10-minute chart. It's a 10-minute chart. If this was like a 1-minute chart, that's 10 bars per 1 bar. That's 20 bars just happened on a 1-minute chart. And there's a bottoming tail here and a bottoming tail here. There's a real possibility that you have a little W bottom on the 1-minute chart. Right? There's a real possibility of a little W bottom on a 1-minute next to a 10-minute pivot. It's good. You might even be able to buy it. Unmall chose to wait. I'm going to take this off now. Unmall chose to wait and get in with a little extra confirmation, and it worked. Okay? Oh, we've been doing this a while. Dwack. Remember Unmall's favorite stock used to trade a while ago? Okay. This thing got a little cray-cray. I mean, little, that's insanity. But nonetheless, when it calmed down a little, now, to be clear, I'm not saying you should be trading this stock. It is pretty wild and whippy, but it's for education purposes. This is not a true, genuine bottoming tail because it's not 50% of the size of the bar. It's decent, but it's not 50%. But that's not the point here. The point here is it peekabooed under an area of support and immediately came back up. And it came back up, chopped around, and then broke out. That bottoming tail on the 60 is that right there. Okay, let's make that a little wider. Let's make it a different color, orange. Okay, and a little smaller there. You guys get the point. Okay, so that on the daily is that on the 60. It's a big deal bar on the 60. It's a big deal bar. Pulls back. This is a warning sign that buyers are in control. But you need more confirmation, and that is what that bar gave right there. More confirmation right there. Bam, super wide range bar. Then a day later, kind of chops around a little bit. Unmall gets in over here. Okay, a battle was fought. Buyers won. And they didn't stop. They kept on going. Pulls back. Now again, I understand this is a sloppy chart. I'm not trying to tell you to go out and just rush to trade it. But you're understanding the concept. And the concept is a battle was fought in an area that buyers had previously stepped up. And when tested one more time, they stepped up again and passed the test. That's the key here. Okay? And there is the lower time frame entry on that same trade. This area where it says possible add, in my opinion, is the best entry on this chart. Unmall got in sooner, but you have a little sloppy wedge / ascending triangle. It's more of an ascending triangle, but there is a little hiccup there. Okay? And this was made possible because of the bottoming tail daily, huge bottoming tail 60. Failed breakdown change your thought process. Okay? Don't marry the chart. So, let the chart guide you. Start with a higher time frame bias. Don't just trade gaps. That stock was not a gap that we just saw. We're basically looking at the daily and letting it speak to us, okay? Trending daily charts are just as powerful. I shouldn't say don't just trade gaps. You can just trade gaps. You can just trade trending daily charts. If you trade both, you're going to have more opportunity, okay? But again, I said it earlier and I'm going to keep saying it. Don't speak to the chart. Let it speak to you and just listen, right? The chart's a parent and you're the teenager. So be a smart teenager and listen to your parents in a way. And it's maybe a bad analogy, but I'm just simply saying so many of us get caught up in our own emotions that we ignore what the chart's telling us. And I can promise you this, you're not right, the chart is. Right? The chart just is, okay? So always start with a higher time frame bias. If you can understand where things are happening, how they are happening, as well as how they got there, right? And we also talked earlier about the longer something happens over a longer period of time, it's more valid because there's more of it, right? So if you see a stock going up on a daily versus a 2-minute, it's more valid on the daily because it takes more people to make that move work, which shows commitment or lack thereof if the opposite is true, okay? And just remember how important those bottoming tails are. But remember, we don't do any of them in vacuums. We always do them in the context of the overall chart, higher and lower time frames. All right? So I hope you guys enjoyed that lecture. I hope you learned a little bit about bottoming tails, how to make your trades more profitable and more reliable. I'm Jared Wesley of Live Traders. We'll get back at it again next week.